So thanks for attending today's seminar. Hope you find it interesting. We'll cover a lot of stuff in the next half hour. What you're going to learn is, of course, based on the opinions and experience of me, the presenter. I am an attorney, have been for 18 years. I was a real estate agent for 8 years. I'm also a title officer and been a real estate investor for 15 years. So pretty knowledgeable on these topics. But again, this is not to be considered legal, financial, or accounting advice. Everybody's situation is different. So in any particular situation, you should consult the proper people to get information specifically about your business. And I'm always happy to have that conversation with you. So, okay, real estate as a business, that's kind of the topic of today's webinar. We're going to talk about real estate agents and ways that they make money and how they can save money. Again, this is a shortened class webinar of a much longer class, but we'll cover a number of pieces of information, enough to give you some great tips and advice. Revenue streams in real estate. Most of you probably already know and understand that there are many ways to make money in real estate. As a real estate agent, you can be an agent or a broker, and you can work with retail buyers and sellers, which is probably about what 95% of all real estate agents do. That's all they do. They just try and find buyers to work with or try and get listings. But there are a number of other ways they can make money, and the sophisticated and educated real estate agents know that there's lots of revenue streams in real estate and lots of ways to make money, and they can certainly increase their business and their income. Property management is one. If you have a real estate license, you can property manage for others, and many real estate agents find that they can make really good money as property managers. There are the sort of the real estate side industries. These are other industries that are tied to real estate transactions. You're probably familiar with a lot of these people because you work with them. That's title officers and title companies, mortgages, so loan officers, and banks, appraisers, contractors, inspectors, etc. Many real estate agents actually engage in a lot of those services as well. Many real estate agents may also do mortgages, or they may be appraisers or contractors. And many real estate agents are also investors. And we're going to talk about more of that specifically, such as techniques that investors use to make money in real estate, such as bird dogging and wholesaling, flipping properties, holding rentals, and partnering. So those are the things we're going to talk about as far as revenue streams. And then we'll also talk about how to save money on the commissions you receive and the money you make in real estate. So as retail agents, I just kind of wanted to bring this up. This is usually about a half an hour conversation in and of itself, but we're just going to kind of lightly touch on it. Real estate agents are in a very unique situation. They're not necessarily employees, and they're not necessarily true independent contractors. They're kind of in a gray area. Generally, they will be considered employees, but there are situations where they'll be considered independent contractors. And the difference is more than just how you are paid. We all know that real estate agents are paid their commissions through a 1099. In other words, their broker does not withhold taxes. But just because you're paid 1099 doesn't necessarily mean you're truly an independent contractor. There's a number of things that a court would look at to determine whether or not you are an employee of your broker or an independent contractor. And those are listed there, and I'm not going to really go over them at this point. The reason, though, you need to understand that is if you are an independent contractor, if that's what you are deemed in what you are doing, then you are personally liable for the work that you are doing. Your boss is not. If you are a true employee, then your boss is responsible for damages or liability that you might have in the course of your work or your job, which is nice if you're an employee, because if you make a mistake or screw up, then your employer is responsible for that, and your employer will cover you or insure you. But if you're an independent contractor, which many real estate agents are, then you are responsible and you are liable, and you could be sued for certain things. So that's just kind of be aware of, because what we're going to talk about today will cover sort of how you can protect yourself from the liability of being an independent contractor, real estate agent, or in some of these other areas of real estate revenue streams. So remember that as a real estate agent, there are situations where you might be deemed an independent contractor. And that liability that you run, or the liability that you have in your work as an agent, as a professional agent even, can become personal liability. And if it becomes personal liability, then it can attach to any personal assets. And if you are sued, they can go after your house, your car, your savings, and other things, other assets that you might have. So one of the very first steps that most real estate agents do is set up an entity, because that will help protect their personal assets from lawsuits that they might have as a real estate agent. So if you do not have an entity set up for your real estate business, that is the very first thing that you should do for liability purposes, because it will help protect you, and it will also save you on taxes. And we're going to talk about that later. Okay, what kind of entity do you set up for agents? Almost always we do what is called an S-elected LLC. This is very often called an S-corp. That's the way many people kind of use the word. It is not a corporation. A corporation is a different type of business entity. We actually will set up an LLC for our real estate agent clients, but we'll do what's called an S-election on it. That's just a filing we do with the Internal Revenue Service, the IRS, which provides for some tax savings. So for your purposes, you will have an LLC, but for tax purposes, it will be taxed like an S-corp. So you get the S-corp tax savings, but you get the better LLC protections, because there are some better protections with an LLC. So for almost every single agent that we work with, we set up what's called an S-elected LLC. So that's kind of the business choice that you would make when setting up an entity for your real estate commissions and your real estate business. Now, you get real estate commissions, right? And you know the check that you get from your broker after every closing. This is considered active income. The technical term is ordinary income, but I like the word active because this is money that you are making through an active business pursuit, right? You had to work for your commissions. You had to do something. You had to get a listing. You had to work with buyers. You had to drive them around. You had to fill out their rep sheet. You had to attend closing. You had to do addendums, okay? This is work, and you're being paid for your work. And we all know that real estate agents work very hard. And because this is money that you are receiving because of work, it really is the salary that you receive for that work. Now, even though it comes in a 1099 check, it is considered salary. And because it's considered salary, it is subject to 3 types of taxes: the self-employment taxes, federal income taxes, and state income taxes. There's nothing we can do about the income taxes, federal and state, but that self-employment taxes is something we can lower. The self-employment tax is the FICA, Medicare, Medicaid, Social Security. If you've ever received a W-2 paycheck, you probably remember getting your pay stub, seeing some boxes where they withheld taxes out of your paycheck, called FICA, Medicaid, Medicare. And you probably remember hearing that your employer paid half of those and the other half came out of your paycheck. Okay. Now that you're a real estate agent and self-employed, you are both the employer and the employee. Because remember, your broker does not withhold those. So now you, as the agent, are responsible for 100% of those self-employment taxes. And that tax rate is actually 15% of every dime net income that you make. Okay, so let's see some examples of kind of how that works. So what is a self-employment tax? It's the Social Security and Medicare. Okay, the Social Security is 12.4% and the Medicare is 2.9%. So the total is 15.3%. And that is, again, that is taken right off the top. It's off your net income, net business income, and so it's all your commissions minus whatever expenses that you might have. And then you just take 15% of that, 15.3%, and that's what you're going to owe just in those self-employment taxes. And remember, these self-employment taxes are before federal income and state income tax. Okay, so this is on top of those. Here's an example. Let's say that you had net incomes of $30,000. Okay, in that situation, your self-employment tax would be $4,500, maybe close to $4,600 in taxes just in those self-employment taxes that you're going to pay, and then you're going to pay federal and state income tax. Okay, so quite a bit of chunk of change if you made $30,000. Most agents do make at least $30,000 a year. That's probably 5 transactions a year, 5 commission checks on an average sale. Now, if you are a busier real estate agent, you make $100,000. That self-employment tax is $15,300. Okay, and again, that's right off the top. That's on your business net income. And then that income goes onto your personal tax return where you will calculate your federal and state income taxes. So for most real estate agents in the state of Utah, they're paying between $5,000 and $15,000 just in those self-employment taxes. So how do we reduce this self-employment tax? Okay, well, we can increase business deductions, and that's great. You know, you want the more you can write off, the lower your business net income is, and the lower that self-employment tax will be. Remember, real estate agents also have lives. They need money. They have personal expenses. They may want to buy a home one day. They need to qualify for a mortgage. If you're a real estate investor, you definitely want to be able to qualify for a mortgage so you can pick up rental properties. And so if you use a lot of business deductions and you get your income down to almost nothing, it's great that you don't pay any taxes, but you're also not showing income to qualify for mortgages. So that's kind of a trade-off on the business deductions. The other way to save money on this tax is do an S election with the IRS. This is what we said before, in that we will do an S election on your LLC. And what this S election does is it divides up the money that you make between wages, which is that active income subject to the self-employment tax, and dividends, which is not active income, it's passive income. And because it's passive, it is not subject to the self-employment tax. So you can save 15% on a part of what you make. So let's see some examples. Okay, well, same 2 examples as before, where our real estate agent either makes $30,000 or $100,000 in the year. And originally they would have paid between $5,000 and $15,000 in that self-employment tax. But now our real estate agent has an LLC that is S-elected, so they've set up the proper entity, and they have filed the correct paperwork with the IRS. So now they're going to do a salary dividend split. So in the first example of $30,000, let's say that we call $20,000 salary and $10,000 dividend. Okay, in that situation, the self-employment tax goes down to $3,000. So instantly they saved $1,500 just by having an S-elected LLC. And that $1,500, not only will they save that this year, but they'll save that every year after year after year after year. Okay? Now let's look at the example with a little bit more money. Let's say our real estate agent made $100,000. And of that $100,000, you're going to call $40,000 of its salary and $60,000 dividend. In this case, the self-employment tax would only be about $6,000, and our real estate agent just saved nearly $10,000 just this year in taxes. So it's a very powerful tool to save thousands, literally thousands and thousands of dollars on your real estate commissions. In fact, it averages about, on every transaction a real estate agent does, they can save between $600 and $800. So for a real estate agent that doesn't have a business entity set up that's S-elected, they are losing $600 to $800 on every single transaction. And for a real estate agent that does have an S-elected entity, they are making an additional $600 to $800 on every single transaction they do. So it's a very powerful tool to save lots of money in taxes. Okay. Now, many of you may be thinking, wait a minute. If I don't pay that self-employment tax on the portion that I call a dividend, why don't I call all the money I make a dividend and not take a salary? Because the salary obviously is taxed higher. Well, the IRS does require that you pay yourself a reasonable salary. Okay? What is a reasonable salary? Well, it's going to depend on a number of factors. What you're doing, how much you're doing it, the state you live in, the industry, what your personal expenses are, what other people are making, these sort of things. We usually leave that up to you and your accountant. Accountants see numbers every day. They know all of your numbers. They know they have other clients who have S corps. They know what they're calling salaries. And so they're much more aware of what is reasonable than I would do. And so that's just something you discuss with your accountant, and some people are more aggressive than others. But you must pay yourself at least a reasonable salary. Okay. It also requires the proper entity formation and maintenance. So you do have to set up an entity like an LLC, and you do have to do that as election. You don't get those tax savings without it. You must have a business entity. Okay. What does that business entity really include? It includes the articles of organization. It's now actually called a certificate of organization. That's what the state calls it. That's the filing you do with the state. It needs an operating agreement, and then you must properly govern and maintain that company. Filing articles or the certificate of organization is very easy. You can actually do it yourself at the state. However, in an audit or a lawsuit, it is pretty much meaningless. So it won't protect you in a lawsuit, and the IRS, if they see that you're not fully formed, they can disregard what you set up and make you go back and pay those additional taxes that you've been saving. So we always recommend to our clients, to go to an attorney, not an accountant, but an attorney, to set up your company, get all the proper documentation, get the right articles, get the right operating agreement, and who can then help you understand how to run and maintain that company, keeping records, doing bookkeeping, accounting, and stuff like that. It's not hard, but there are things that you need to do. Obviously, if you're going to save thousands of dollars in taxes, it is very worth having the right entity set up and the right maintenance. So those are things that you need. We also always recommend outside professionals, such as accountants or bookkeepers, legal counsel, or assistants. We'll talk a little bit, we talk quite a bit about building your team in real estate. And you definitely want to build a team. And you want not only your team that helps you make money in real estate, but you want outside professionals to make your life easier. Why would you spend hours doing your bookkeeping when you can pay someone 10, 12, maybe 15 bucks an hour to just kind of keep track of your books, right? Because then you can go out and make money. So it is much to your advantage to hire outside professionals to free up your time to where you are utilizing your time most effectively to make money. Okay, so like we said, build your team. Protecting your branding. This is kind of real estate agents that make good money in real estate brand themselves. Very simply, they just don't knock on doors or talk to friends or post on Facebook with their newest listing. They actually treat their real estate as a profession, and they are professionals. They brand themselves. They have business cards. They probably have a website. They have marketing flyers, and they have a consistent marketing plan that they do weekly or monthly to continue driving business. You can't just sit back and expect people to come to you. Good real estate agents that make lots of money in the business go out and brand themselves and market themselves. For our clients that do some branding, we do help them with copywriting and trademarking their brands if necessary. And we kind of help them through social media. There are some things about social media that you should be aware of. We want to be very careful about what you post. And so our clients, they give us a call. We're always happy to have conversations with our clients about protecting their branding and protecting them from liability when using social media to do some marketing. Okay. Other revenue streams in real estate. Okay. We've talked about how to save money in real estate to the tune of tens of thousands of dollars. Now we're going to teach you some basics about how to make money in real estate. Like we said, you can be a retail agent or broker, and that probably includes about 90% of real estate agents, because most real estate agents aren't educated enough to know that they can make money in other ways. Uh, and so property management is one. The outside real estate services, such as mortgage loan officers, appraisers, contractors, etc. Bird dogging and wholesaling, we'll talk about those in just a second. Flipping, holding, and partnering in real estate. So let's look at some of those other revenue sources. Property management. Many clients, many real estate agents, particularly those that work with real estate investors or are real estate investors themselves, do property management. And as licensed agents, you are allowed to do property management. Make sure you talk with your broker. But they have changed the licensing rules now, and pretty much most brokers can do property management. If that's something you're interested in, and your broker isn't interested in doing it or overseeing it, you may want to find a broker that is. Title. Title is another area of real estate that you can do. Unfortunately, you cannot hold a real estate license and an escrow license at the same time. But that is another option, for those that maybe don't want to do real estate as a real estate agent. Maybe they just want to be an investor and they can do title work. But loan officers, appraisers, contractors very often have real estate licenses as well, and they make money on multiple sides of the transaction. So those are ways to make money. Bird dogging. What is bird dogging? Bird dogging is essentially scouring the MLS, driving neighborhoods, and finding deals. Okay? These are finding real estate properties that are desirable to investors. They might be discounted, they might be in a bad state of repair, or something about the property makes it desirable for real estate investors. And if you find some property, you can pass that on to a real estate investor. And if they end up buying the property, they will pay you a bird dogging fee. Small fee, it's sometimes around $500, can be a little bit more. And so all you've done is find a property and give the address to a real estate investor. And if they end up buying, you just made $500, and you didn't even have to, sometimes didn't even need to leave your house. If you found it on the MLS and you know how to kind of comp out properties and analyze properties, you can find great deals just through the MLS, pass them on to a real estate agent, and make $500. Wholesaling, and yes, you can do that as a real estate agent. Wholesaling is where you actually find a deal, find a project, and you put it under contract. So you lock it down. You lock down the rights to buy it, but you have no intentions of actually buying the house. You're going to assign that contract to somebody else, usually an investor, who will then take it from there and buy the house. Wholesaling is a great way to make money. There are wholesalers that make $5, $10, $15, and even $20,000 per wholesale. They make more by wholesaling the property to an investor than they would as a real estate agent on the deal. And you can wholesale properties that are on the MLS, and you can wholesale properties that are FSBOs, or otherwise not listed with an agent. And so many of you may be thinking that, as a real estate agent, a FSBO, either you're not going to get paid, or you might get paid less, or you have to negotiate some kind of fee from somebody who doesn't want to pay a real estate agent fee, right? But if you find a FSBO, you lock it under contract, and you wholesale it to an investor, you can make $5,000 or more simply by passing on that contract to somebody else. And yes, it is legal for real estate agents to wholesale. I do recommend that you tell your broker, if you work for a broker, that is what you are doing, so that they are aware of it, but you are legally allowed to do it. So it's just a matter of informing your broker that you are doing a transaction sort of as an individual, not as a licensed real estate agent. So that fee will not go through your broker. That fee is all yours. And there are many brokers out there that are happy to work with real estate agents who do wholesaling, because they know that's a way that their agents can make money. So it's generally not an issue with licensing. You can be a real estate agent and bird dog and wholesale to others. There might be a few hoops to jump through, and like talking to your broker, and we're happy to have that conversation with you. If you are an agent and these are things that you want to do, we're happy to talk to you about it. Those are two other revenue sources you can make as a real estate agent. Okay, how are those taxed? Those are taxed just like your real estate commissions. So you would set up an S-elected LLC to do that business in. In fact, most of our real estate agent clients that have a S-elected LLC set up for their real estate commissions also do their wholesaling and bird dogging through that same entity. So that one S-elected LLC. Okay. Another way you can make money is by flipping properties. This is buying a property, rehabbing it, and then selling it for a profit. Okay. Most of you are probably very familiar with this. You may have done it yourself, or you may have bought and sold properties for clients who are flippers. And that's great. Flippers are great clients because they're repeat business. And if you are interested in improving and increasing your business, you may want to consider working with real estate investors. If you do a flip property, how is that taxed? Again, it is almost always taxed just like your real estate commissions as active income. So you would again use your S-elected LLC to flip your properties in, just like you'd run your bird dogging, your wholesaling fees, or your real estate commissions through. And again, most of our clients will use that same S-elected entity to do their flipping properties in. Okay, so pretty much everyone in the business of real estate, regardless of whether you're a contractor, title officer, possibly an appraiser, a flipper, a wholesaler, a bird dogger, will almost always have at least one S-elected LLC set up for their liability protection and to save on taxes on the money that they make in those real estate endeavors. So that's pretty much true for any real estate agent, is set up that S-elected LLC. Okay, if you're listening today, you've been listening to this webinar, we already kind of showed you how you can save taxes. So we took an example of a real estate agent that makes $50,000 in real estate this year. Without an entity, they would pay $7,600 in taxes, in self-employment taxes. But with the proper entity and the proper guidance from us, their taxes would only be about $4,500, and we can save you over $3,000 this year. And if you are interested, we can help you start savings on taxes for only $5.99. That's about 10% off our regular fee. And all you need to do is just get in touch with us to set that up. You can give us a call at 801-560-2180 or email me at jeff@bregliolaw.com. The name is spelled right there above on the screen. Or you can always go to bregliolaw.com, which is our website. You can also access our website through mylawyerjeff.com. So those are the ways to get a hold of us. Okay, now once I set up that S Corp, what are the hidden costs? Like I said, we can set it up for $5.99, but are there any additional costs? Yes, you will need to renew that entity every year, so there'll be some minor expenses, very little, to renew that company each year. You'll need to do a tax return for this S-elected LLC. Most accountants in the state of Utah will charge you about $300 to $400 to do a tax return, so you'd have to do a tax return. That would be next April. Okay, and you should go on payroll. Payroll is actually very easy to do, and we have a lot of clients set up their payroll, and it's actually very inexpensive. Many people think it's just too complicated or too expensive to do. It's actually super easy to do and not expensive at all. And it's a great way to kind of have some of those taxes already withheld, so you don't get a big chunk, at tax time have to pay a big chunk of money. So you can think of yearly costs of maybe $400 to $500 additional costs each year after the first setup. So for the first year, maybe about $500-600, and then maybe another $500-600 a year after that. But remember, you're saving $1,500, $5,000, $10,000 in taxes every single year. So a $500 cost is nothing compared to the amount you're saving. And we're always very surprised at how many real estate agents are like, oh, well, I don't have $500 and I don't think it's worth it. But when you show them the numbers and they realize, holy cow, I could save $5,000, then it's a no-brainer. I mean, there's just a no-brainer why you would set up an entity to save that much money in taxes. Okay. Now, holding rentals, another revenue stream for real estate. Many real estate agents have rental properties and they're landlords, and this is great. Now, these are taxed a little bit differently. These are not considered active income. This is passive income. Holding a rental property is like owning an asset, like owning a stock. So it's not the money you make from the rentals. That rent is not subject to the self-employment tax. Okay, so it's taxed differently. It's already a lower tax. And we never put in a rental property into an S-elected LLC. There are some tax ramifications for that and some tax reasons. So for your rental properties, you're going to use just a straightforward LLC or maybe a series LLC that is not S-elected. And so we very much, if you do engage in real estate investment and you maybe hold rentals and you maybe do flips, you need to understand and talk to people who are experienced in the industry, lawyers and accountants who understand what you are doing, because you could pay a whole lot more in taxes by going with somebody who doesn't understand exactly what your business is. So again, flips, real estate commissions, bird dogging, wholesaling, and other of those revenue streams we talked about previously, those you all run through your S-elected LLC or your S-corp. But your rental properties, your long-term holds, they are not run through that S-elected entity. They are run through a separate company that you set up. So if you are a real estate agent and you have commissions and you also have rental properties, then you will need a minimum of 2 LLCs set up. And you definitely want to hold your rentals in an LLC for a number of reasons, which is a completely different class that we can talk about. And it's usually about an hour or two. But you want to protect your personal assets from lawsuits of the rental property, lawsuits from your tenants, and you also want to protect that rental property from other lawsuits that you might have. And here at Braylio Law Office, we do a lot of asset protection for our clients. And when we're talking about long-term rentals, we're really talking about asset protection. And that's a different situation than tax savings on our commissions. So that's why we've kind of used 2 different entities. Okay, so let us create your entity for you. Just remember that all your questions will be answered by an attorney. We are not an online form generator. We do know that there are online avenues for you to set up your companies. Those are boilerplate documents. They're terrible, to be completely honest. They're almost worthless. And by the time you pay all the fees that are hidden, because they do have hidden fees, you're paying $300 or $400 anyways. So for a couple $100 more, you can actually have it answered, all your questions answered by an attorney. You can set it up correctly because they will not tell you how to set it up because they're just an online place. And we will guide you through that. We'll get you all your legal documents. We'll personalize it to meet your needs. We do have the ability to keep you private, and we can certainly do additional legal documents that you might need. And we are a small business law firm, so we can help you with a lot of other services as well. So again, we're here to help you. These are just other things that we can help you with, but we're kind of nearing the end of the half-an-hour webinar. So we're just going to kind of go through quickly. Thanks for listening today. Again, if you need to get a hold of us, you can always reach us through our website, bragliolaw.com. There's an option on the website to schedule a meeting with me, or send us an email, or there are phone numbers there as well. So thanks again for attending. Have a great Friday and a great weekend.